But here's what I like about NIO. NIO, much unlike many other car companies that are getting into the EV space, is focused on self-driving, like Tesla.
Hey, this is Warren Redlick. Got a new setup here for you. I'm going to talk today about Tesla and NIO, a Chinese electric vehicle manufacturer that a lot of people have been asking me about. So we'll call it Tesla versus NIO. First, we're going to talk about Tesla in 2021, and then we're going to go in depth on NIO, and then we're going to talk about both companies at the end. Before I get into it, I'd like to thank Bradford Ferguson of Halter Ferguson Financial and all my Patreon supporters for helping continue this development of this channel. I'd also like to mention the merch. Please buy a t-shirt. Elon says be less wrong. We're always wrong. We should strive to be less wrong. So the t-shirts are in the description below. The Patreon link is in the description below. So let's get into it. Are you ready? Let's go. The big Tesla news that prompted me to make this video was this report I saw in many sources, including Tasmanian, that it is expected that Tesla will produce 550,000 vehicles in Tesla's Shanghai Gigafactory in 2021. That is above what I expected for Shanghai, and it has implications for how many vehicles Tesla will produce overall in 2021, and it suggests where Tesla's revenue, profit, and share price are going in 2021. Using the battery revenue model that I did before, I wanted to put this new number in, look at some other numbers, and come up with some forecasts for where Tesla is going in 2021. We don't know what's going to happen in the fourth quarter of 2020 yet. That'll give us a little bit more insight when it happens. But for right now, we have a really good sense for where Tesla's going. So let's take a look. We don't know the reliability of the report that said Tesla would produce 550,000 vehicles in 2021. The story was that Tesla would produce 300,000 Tesla Model 3s and 250,000 Tesla Model Ys. It's expected that Tesla will start Model Y production soon, and it may ramp quicker than the Model 3 ramped. As you can see here, current Tesla capacity for Model 3 is 250,000 in Shanghai. This would mean an increase of Model 3 capacity, which isn't surprising, and it would mean Model Y would achieve 250,000 units in the year when it hasn't even started yet, which seems like a little bit of a stretch, but if it ramps well, it ramps well. And I think long-term, we're expecting that Model Y production will be over Model 3 production, so we'll see where that goes. When you combine the Shanghai production with what we expect from Fremont, which is at the top of this chart, we expect Fremont to produce over 500,000 vehicles. So I put together a model based on what I had done previously with my battery / revenue model to see how it lines up. And then we have to look also here, we see there's going to be Berlin production, Texas production, and maybe other production in 2021. All of this seems likely. We're expecting Model Y to be produced in Berlin soon. We're expecting Model Y to be produced in Texas in significant numbers in 2021. Cybertruck seems likely by the end of 2021. So there's a lot of potential here. So how does it all add up? Let's take a look. I want to start first with the optimistic scenario. This is the bull case. This is everything goes great. It's spectacular. And Tesla ends up producing really good numbers and we get a really optimistic scenario. These numbers here include near the top, you can see Model 3 made in China, Model Y made in China at 300,000 and 250,000. Then you go down to Fremont and you get 500,000 between Model 3 and Model Y. In an optimistic scenario, that might actually be low, but we'll leave it there for now. With Berlin, we're expecting some Model Y production, so I called it 100,000. We're expecting some Model 3 production. I called it 50,000. I added 100,000 for Austin's Model Y, 50,000 for Cybertruck, and a total of 80,000 between Model S and Model X. If you remember on that previous production capacity chart, the production capacity was 90,000. What we've seen in terms of numbers is that Tesla has been producing around 16 to 18,000 a quarter, or less than 80,000 a year. So this assumes things go well and they get up to 80,000 a year on Model S and Model X. I threw in Roadster with 1,000 vehicles. It doesn't have a significant impact on anything. You can see it's $0.2 billion in revenue, which is trivial. And I threw in Semi at the top. I do think it's likely Tesla will produce some Tesla Semi tractor trailer vehicles in 2021. In this case, I put up 5,000 units. Again, that's fairly small. If you look at these numbers, it's Model 3 and Y in Fremont and China that are driving the revenue numbers. Berlin and Austin add something, but the big numbers come out of Shanghai and Fremont. Berlin and Austin will kick in a much bigger way in 2022. But what's interesting here is when you look at the vehicle totals with this optimistic scenario, we see 1.4 million vehicles produced, which is a lot. And that uses a total of about 99 gigawatt hours of batteries, which I'm going to talk about in a minute. Should also mention, I included Powerwall, PowerPack, and Megapack in this story, as well as Tesla Solar to give some idea. These numbers are not super far off from where Tesla has been in 2019 and 2020. I'm predicting this is the optimistic scenario, so we're looking at an increase in solar that's significant. Elon did say in the quarterly call that Tesla's solar roof was going to be a killer product you'll see next year.
What do you want the world to look like? When you look around the neighborhood, in the future, a decade from now, what do you want? What products are going to make your life better? What future do you want? And I think a future where we've got beautiful roofs with generating energy that are tough and resilient and better in every way than a regular roof, and alive with energy. That's the future we want. The solar roof is a killer product. This will become obvious next year.
So Elon is telling people something special is going to happen with solar roof next year, so we'll see. This includes a significant increase in Megapack and Powerwall. I usually tie my Powerwall numbers to solar. Figure if somebody installs a solar system, they're going to add a certain number of Powerwalls, and I threw it down as 4 Powerwalls per system. And some people might add Powerwalls who don't have solar. In this optimistic scenario, and I could have gone further, but in this optimistic scenario, I have average selling price of vehicles. I included a fairly optimistic scenario for full self-driving, although that still doesn't add up to a lot of revenue. And keep in mind, they are already earning money from full self-driving. So this might be a little more in this scenario, but it's still not that big of a deal. The amount of batteries used by the Tesla energy side, Powerwall, PowerPack, and Megapack, this calculates out to 7.4 gigawatt hours of batteries for Tesla energy in 2021, which is a pretty big jump from what we expect to see in 2020. But again, this is an optimistic scenario, and this does not have a huge impact on numbers. The growth in Tesla energy will have a much bigger impact on Tesla's bottom line numbers in future years. Right now, it's vehicles that are really driving the game. In this optimistic scenario, Tesla's revenue really shoots up for 2021. We're looking at a total revenue of nearly $89 billion. That is a monster jump from what we're seeing in 2020. The other interesting thing that I see here is when you add up the numbers, you get 106 gigawatt hours of batteries, and Tesla's not producing its own batteries in significant quantities yet. If you go to my other videos where I talk about the battery revenue model, I start in 2022 assuming that Tesla produces 100 gigawatt hours of batteries as they forecast at Battery Day for their high nickel batteries, and that they purchase another 100 gigawatt hours of batteries from suppliers in 2022. If these numbers, if this optimistic scenario is true, Tesla will already be using more than 100 gigawatt hours of batteries from suppliers in 2021, and that's likely to grow, so the battery numbers for 2022 might be even bigger than what I predicted in my previous video. The revenue breaks down to about $77 billion from vehicles and a little less from Tesla Energy, from solar and energy storage. I also added $3 billion in for other revenue, service, insurance, There's other things in there. I don't think that number's far off of the 2020 numbers. I didn't try to exaggerate that one. And again, that's a small number, not a huge impact. But you can see Tesla overall approaching $90 billion in revenue for 2021, which is nearly triple the 2020 numbers. So that 550,000 number for Shanghai drives a lot of big results. And this does depend a lot on Tesla suppliers being able to produce the batteries in the quantity Tesla needs to meet these numbers. But we have seen that LG Chem and CATL and Panasonic are all spooling up production. So this is possible. I think this is a little optimistic, and maybe 80 billion is a better chance, but I wouldn't rule this out. So let's take a look at the pessimistic scenario. So in the pessimistic scenario, I took all the numbers down a bit. Instead of 550,000 vehicles in Shanghai in 2021, I took it down to 450,000. I just knocked 50,000 each off of Model 3 and Model Y. I kept Fremont at 500,000 vehicles. That seems about likely for the Model 3 and Model Y. I reduced Model S and Model X to 60,000 units. I think that's overly pessimistic, but we'll leave it at 60,000 units. I reduced the numbers for Berlin and Austin and Cybertruck, and I reduced the numbers for Tesla Energy as well. In this more pessimistic scenario, it's still pretty good. Total revenue ends up being $63 billion. That's the bottom right corner there. Total revenue, including full self-driving, ends up being $63 billion. That's still about double 2020 revenue. So this is pretty amazing stuff. The total battery usage, when you add everything together, works out to 79 gigawatt hours, which is still high compared to what I expected when I first started thinking about this, because again, if you're shooting for 100 gigawatt hours of supplier production in 2022, that's only a 25% increase from the 79 gigawatt hours we're talking about. The 25% of 80 gigawatt hours would be 20 gigawatt hours. That would get you to 100 gigawatt hours for 2022. But battery supply seems to be growing faster than that. At least that's what Tesla's shooting for. A 50% increase from this number would be 120 gigawatt hours of batteries in 2022. So if you go back and look at my 2022 projection, even on the pessimistic scenario I'm painting here, it's looking good for 2022. The vehicle revenue works out to $56 billion in this scenario. Energy revenue down to $1.6 billion. I think that might be overly pessimistic. And then other revenue, I just left that at $3 billion. It's in the ballpark of right. I used more conservative numbers for full self-driving in this scenario, so those numbers end up being less. In the optimistic scenario, I had $5.7 billion of full self-driving revenue. In this scenario, it's only $2.9 billion. I'm going to talk about NIO next, but before I go there, I just want to say I looked at those numbers, and I probably said this already in this video, but I just want to emphasize it. The numbers look really good for Tesla in 2021. Obviously, if COVID-19 causes shutdowns, there's some other scenario that causes massive problems in the economy or in society, that could have a big impact. But the practical reality is Tesla is looking really good for 2021 unless something really unusual happens. And if something really unusual happens, other companies are going to be far worse off than Tesla. So now let's take a look at NIO. I keep making videos about Tesla, and I keep getting questions from people asking me what I think about NIO. And at first I was reluctant to address it, and finally I decided, let me take a look at it. So NIO is an electric vehicle manufacturer in China. They have 2 vehicles they're currently selling, I believe. Don't hold me to this. This is based on my research. I did look at their most recent quarterly report. NIO is publicly traded in the United States, and they do have SEC filings, so there is something to look at. And I did read the transcript of their most recent quarterly investor call. I tried to listen to it, but it was half Chinese, and it just gets tiring after a while because I don't speak Chinese. I'd give Japanese a shot, but not Chinese. So when I read their quarterly report, it struck me as a lot of fluff. It's one of the things I like about Tesla is Tesla does not seem to be about fluff. A lot of corporate reports, a lot of these quarterly filings are fluffy. So you can see here, it's a pioneer in China's premium smart electric vehicle market. That just sounds like fluff to me. Their mission is to shape a joyful lifestyle by offering premium smart electric vehicles and being the best user enterprise. I think that means best user experience, and maybe a poor translation. The word joyful seems strange to many people, maybe. I lived in Japan. It sounds like something that the Japanese would do with the English language as well, so I'm not too worried about it. One thing that struck me here is NIO designs and jointly manufactures and then sells these premium electric vehicles. This is one of the things I'm gonna hit again and again. There's a huge difference between NIO and Tesla, or there are huge differences between NIO and Tesla, and one of them is Tesla does almost everything in-house, and it manufactures its own vehicles. NIO is not really making its own vehicles. It's jointly manufacturing them with a joint venture. I'll get into that. NIO pitches itself as an EV maker. They pitch themselves as having advanced technology. They talk about autonomy. As you'll see as we go through this, they're not really that far ahead. This is one of the fundamental questions about NIO. When people ask me about NIO on Twitter or on my YouTube comments, well, what are NIO's advantages? What makes NIO special? With Tesla, we know some key advantages: manufacturing prowess, battery technology, full self-driving, over-the-air updates, all kinds of software. There's a lot of things that Tesla has going for it that most other companies don't have. And the question is, does NIO have the same thing? And I think the answer is no. I don't see it. And I'm going to go through and I'm going to show you all that. But on the screen right here, you see the ES8. That is one of their models. That's, I think, their first model that they've been selling. They also are selling now the ES6. You can see details of the ES6 here. The range is hard to compare with American ranges. They make this pitch for it. They make the pitch for their vehicles. They look okay. I don't think they look outstanding. It's really hard to say based on look. And they also have a new vehicle, the EC6, that is not, as far as I know, not in production yet, or it's barely in production if it's in production. It wasn't in production at the time of the quarterly report. And this one, they're talking about a 100 kilowatt hour pack. We're going to talk about battery pack in a minute too. In the latest quarter, NIO delivered over 10,000 vehicles, the ES8 and the ES6. They're expecting to deliver over 11,000 vehicles in the third quarter, in their third quarter, which hasn't happened yet. One of the accounting details that troubled me is they claim they have positive cash flow from operations. And again, I don't know how much of this is language and poor translation and how much of this is not being straightforward. I don't think their cash flow is really positive, and I'm going to show you that. He did say that, there are 11,000 vehicles in the third quarter. The CEO referenced current constraints on production will be lifted in the near future. It's not clear what those constraints are. We'll see if they're able to deliver on that promise. That's something we won't know until the future. And it's not clear what their long-term expectations are in terms of how much they expect to produce. I at least didn't see it in the numbers I saw. Just another way of looking at the numbers here, you can see that in the second quarter, it was 10,000 vehicles. Quarter one was a very thin quarter, probably both because of COVID and because of quarter one might be seasonally weak. Quarter four was a reasonably big number, and you can see quarter four was a big number in 2018. So quarter two is a jump. It's a huge jump on 2019's quarter two. This is probably because of the additional vehicle that they're selling. So they're making progress, but if you do a run rate of 10,000 vehicles a quarter, you get 40,000 vehicles a year, which is a long, long way from where Tesla is. This is the big question. How big of a growth story is NIO? What's the picture about where their growth is going down the road, 1 year down the road, 5 years down the road, 10 years down the road? That story isn't really obvious yet. And just one more quick detail to take a look at. We see the vehicle sales worked out to $490 million, and their margin was 9.7%, which is positive and much better than the previous margin in second quarter of 2019 of 24% negative. And even the previous quarter was a negative 7.4%. So that's a good sign. One other detail from the numbers, we see that there was about $500 million in revenue from vehicle sales in that quarter. with 10,000 vehicles and $500 million, it would be $50,000 a vehicle. This $493 million with more than 10,000 vehicles shows an average selling price of less than $50,000. So Teslas are selling for significantly more money on average. So it's not clear how NIO is going to make money selling 7-passenger SUVs with 100 kilowatt hour packs for an average selling price of $50,000. Something doesn't seem right in that story. I suppose it's possible they've just got this phenomenal manufacturing expertise, but I think when you see everything else that I'm going to show you, there's something that's just not right in the story. I talked about cash flow before, and it was something I'm concerned about. You can see here that they currently have, as of June 30th, 2020, they had $1.6 billion US in cash on hand at the end of the second quarter. In the investor call, they claimed, and in their documents, they claim they have positive cash flow. One of the things I noticed was that they had they've basically gotten some cash injections. They've had investors invest more money, which increases the amount of cash they have. So it's a little fuzzy. Is the cash flow coming from the sale of the vehicles, or is the cash flow coming from additional investments coming into the company? You can also see that in June, NIO did a share offering in the United States. They sold 72 million shares at $6 a piece, and then there was an over-allotment of another 11 million shares. Well, that works out to millions and millions of dollars that end up in their cash position. So how is this cash flow working? How are they accounting for this cash flow? I wasn't quite clear on that. I'm not an expert in reading these quarterly reports. I'm more interested usually in the fundamentals of the business. And I'm going to talk about that in a minute. But this one troubled me, and there's one more detail. There was a question from an analyst about cash flow. And cash flow, the vice president of finance explained the cash flow, and it wasn't just operations. He said they did a better job at controlling operating loss. That's not positive cash flow, that's negative cash flow. And they did a better job of controlling that. And then they said that they also improved cash flow by renegotiating their credit terms. Basically what this means is they're paying their suppliers later, and they just negotiated that. So payments to suppliers were delayed. So at least 1 month of supplier payments were pushed out past the quarter. And that's certainly going to improve what your cash position looks like at the end of the quarter if you push some payments out an extra 30 days. Going along with renegotiating the credit terms, they're getting their cash earlier. And Elon talked about that at Battery Day too. If you can get your cash quickly after you pay your suppliers, or even before you pay your suppliers, it makes your cash numbers look good. It makes your company look good. So I'm not saying Tesla doesn't do that as well, but it seems like this is a twist that they just imposed. This is a twist that they just started at NIO that may have helped their cash flow. And he didn't mention here whether they're considering the cash injection and the sale of shares in America as part of their positive cash flow. You know, their cash position improved, but their cash position improved in large part because of things not having to do with operations. So I found that troubling. It's not a deal breaker. It's a startup company. They're in early days, but that just seemed a little bit troubling. In their profit and loss numbers, you can see there was a loss from operations. They lost $164 million, and that's better than previous losses. But again, this calls into question the idea of having positive cash flow. If you're losing money from operations, long run, you don't have positive cash flow, you have negative cash flow. The reason they have positive cash flow is because something else is being gained. And you can see the same thing. There's net loss, there's an operations loss. So something is a little fuzzy here. Now, I tend to be more interested in business fundamentals. I'm less worried about balance sheets and profit and loss statements and quarterly numbers, and I'm a lot more interested in what's the business story. NIO just announced a 100 kilowatt hour battery pack, and this is an image from that announcement. And what you can see here is battery modules. And this is the type of thing that shows I had the same problem with Lucid. Lucid was showing off their advanced battery technology, and then you saw that they had modules. And what we know from Tesla is they're stepping ahead. Modules are old technology. Battery modules are old technology. This system requires additional hardware, additional weight, and additional expense. Even before Tesla announced the structural battery pack, battery maker CATL was talking about cell to chassis. Modules are old. This is not new technology. This is old technology. So it's a little bit of a concern that NIO seems to be relying on old technology rather than the advanced new technology. The second thing I find troubling about NIO and their business fundamentals is they've adopted this battery swap technology. The idea is that instead of charging your battery when you need a charge, you drive into this special station and the equipment swaps your battery in about 3 minutes. So it's much quicker than charging, and it's comparable to filling a gas tank, and you're swapping out your battery. But Tesla had that several years ago for the Model S, and people didn't use it, and it really wasn't a good system. And the problem with a swappable battery is the battery is not well integrated with the car. This is why structural battery pack is so important. The practical reality is if you design the battery well and you use good batteries, then it lasts the life of the car and you don't need to swap it. And if you have enough range, the times when you're going to need to charge the battery and spend time charging it, and it's important, and you have to have a delay you don't like, are rare because you have such good range that it doesn't come up that much. You're charging in your garage, this only comes up on long trips. And if you're going on that long of a trip, you charge when you need a break anyway. So the idea of having a battery swap business model, I find troubling. I don't think that's a winning business model. I don't buy it. I know they're pushing it. They think it's a winning business model. And for all I know, it is a winning business model in China, but I don't think it's a winning global business model. NIO refers to the business model as battery as a service. It's like a kind of like a technology buzzword way of characterizing it. And the idea is you would buy your vehicle without paying for the battery. And so you save money buying the vehicle, and then you lease the battery from, you either lease the battery from NIO or you lease it from a battery company. There's more on that coming. So you have a monthly payment for the battery rather than buying the battery pack yourself. And I just find that it's like more complicated. It's more confusing. Is this really an advantage? Isn't this really going to cost the customer more in the long run? Are people going to go for this? There's other problems with it. When you own your battery, you have an incentive to use sound battery management techniques, and you don't charge to 100%, you don't discharge to 0, and you know, when the car tells you to be careful with the battery, you're careful with the battery because you don't want to hurt cycle life. If you're going to swap your battery, you don't care that much about what happens to the battery you're using. So in the long run, that may not be good for the batteries and may not be a good business model. And just here you can see there was a reference to setting up a battery asset management company, like the battery ownership would actually be a separate company. So you'd be buying a car from NIO, and then you'd be leasing the battery from somebody else who's going to manage the battery setup. I just find that complicated, and you know, why are we making things more complicated? Just sell me the car. If you're selling cars for $50,000 with the battery, you know, why am I buying it? And if you're not having any problem selling them and you can't meet demand, then why are we going into this battery swap process? To me, it just doesn't add up. I think the battery swap idea is not the best technological answer to what people are looking for in their vehicles. So this does not seem a positive sign to me. The last thing I noticed about technology was, again, going outside the house, not doing their own technology. NIO partnered with Mobileye to do their autonomous driving features. And they admitted in the quarterly call, our feature is not as competitive as Tesla's. Our feature can only support getting out and in the parking space. This is their autonomous driving is just getting in and out of parking spots. It's not lane keeping on the highway. It's not, you know, the things that they should be shooting for. It sounds like they're a long way off. The other thing that stood out to me was their autopilot option, or they call it NIO Pilot option, costs 10,000 renminbi, which is only $1,500 US. That's not very expensive. Tesla's charging $10,000 for full self-driving. So this is a pretty surprising number. I don't know how that fits. NIO calls it Navigate on Pilot, and it doesn't look that impressive, and they seem to acknowledge it's not that impressive yet. One of the things I did like is the way the CEO talked about how their standards are for autonomous driving. They were asked about level 3, level 4, level 5, and he just basically said, we don't look at these levels. And I actually find the levels kind of annoying too. I don't think that's a good way of thinking about it. And I like the way he talked about how they look at autonomous driving, which is two main goals. How much time can we free up for the users, the people who are in the car, so that they don't have to... I don't know if we said free up time. I don't think it's necessarily freeing up your time, but it's putting less pressure on the driver, that the driver's supervising the driving rather than actually focusing on the driving. They're just supervising instead. And the second criteria is, can they reduce accidents? I think these are much more important goals than some arbitrary level definition. So I applaud NIO for that. I think they're doing well there. And I mentioned this earlier, but I wanted to get back to this. NIO does not manufacture its own vehicles. NIO works in a joint venture with JAC. I can't pronounce the first name, but I believe it's a joint venture with Volkswagen. And their vehicles are all produced at this joint venture facility. They are talking about doing a second plant, but it sounds like there's no extreme priority on developing their own plant. They think with the current plant, they're going to achieve 150,000 vehicles a year, which is a long way from the 40,000 path they're on now. So they're not making their own vehicles. This is a huge difference from Tesla. Tesla makes its own vehicles. So the short story on NIO is, yes, they're an electric vehicle maker. They're making some vehicles. There's some promise there. It's not clear whether they're going to be able to make vehicles at scale profitably. It doesn't look like they have advanced technology like Tesla has. From what I can see, their vehicles are not particularly special. They don't have the same performance. They don't have the same efficiency. It's hard to say whether they're comfortable or not. They claim that they're extremely luxurious. It's hard to see that. And if they're charging $50,000 a vehicle, you kind of wonder how they're doing that. We don't know what battery technology they're using exactly. But one of the key things here is Tesla's big strength that we've seen helping them grow rapidly and improve rapidly is they're doing everything in-house. Not everything, but almost everything in-house. NIO doesn't seem to be doing a lot in-house. It's not really clear that they're doing a whole lot in-house. So what are their advantages? And, in my conversations with others, this is stuff on Twitter and in YouTube comments, people are claiming, well, they have an advantage because they're a local company. Well, Tesla's not a local company, and they're growing really well in China. And there are lots of other local electric vehicle manufacturers in China, so being local is not it's not a particular advantage. I don't see where... With Tesla, we can see the advantages. We can see that they're doing things a lot differently than other companies, and what they're doing makes a huge difference. They're manufacturing heads, the machine that makes the machine. They're building new factories, and they're getting better at making factories. NIO doesn't even have a factory of their own yet. They're a long way from coming up with manufacturing advantages, and if they're doing a joint venture with Volkswagen to build vehicles, that's not a way to improve your manufacturing technology. So I think it's dubious. I think they're certainly making cars and they're selling cars, and if they get to the point where they can make a profit selling cars, they'll survive. One of my big things with a company like this is, where's the growth story? With Tesla, we can see the growth story. They've come up with a new battery technology that will allow them to make batteries faster, and they're sharing that technology with their partners, who are then going to be able to make their batteries faster. They're improving manufacturing techniques. The best part is no part, the best process is no process, the machine that makes the machine. They're on the ball with how we can improve, how we can radically improve, how we can get costs down quicker, how we can make more vehicles. Tesla is really pushing the limits of what can be done. NIO is just making cars. I hope they do well. I want to see more electric vehicle makers making progress. I don't see the edge there. So overall, I understand people want to see another Tesla come along, and they want to get in early on the next Tesla. Right now, I don't see it with NIO. I think it might be a good company. They might be successful. They might be able to make cars and make a profit. But the growth story just isn't there. If somebody can show me where the growth story is, I'm open to hearing it. To be clear, I'm not offering investment advice. This is just my opinion. When I look at it, I see a potentially promising company that might be able to survive. I don't see a company that's changing the world with brilliant, crazy technology. Relying on Mobileye for self-driving software, maybe Mobileye's making progress. Maybe they're in second place behind Tesla. Maybe they're in third. It's really not clear how strong Mobileye's technology is. And NIO is not leading. They're not going to have a special advantage if they're using Mobileye because other companies are using Mobileye too. So what do you think about NIO? Please let me know in the comments below. And we're about to wrap up the video. I'd like to ask you, please share this video with your friends, especially people who were telling you they're excited about NIO because it's relevant to them, or people who are interested in Tesla. Please check out my other videos. Merchandise, of course. Elon says be less wrong. There's a bunch of t-shirts. Check, the t-shirts are down below. Please support this channel on Patreon. Give us a thumbs up. Subscribe to the channel if you're not subscribed already. I do a lot of videos like this. Thanks very much for watching.